Hello, I'm Kamal Santamaria. This is Counting the Cost on Al Jazeera, your weekly look at the world of business and economics. This week, big tobacco. Despite all the health warnings, it remains a multi-billion-dollar global industry. We've got two takes on it: how big tobacco players have shifted focus to the developing world to stay profitable, and how your pension money may well be tied up in the industry. Also this week, ISIL and oil. Even as the Iraqi army fights back, the armed group is still strong and well funded. We'll update you on how ISIL controls the oil fields, how it sells the oil, and why it's still finding customers for its contraband crude. And Greece versus its lenders. The country is bankrupt in all but name, and there's no debt relief on the horizon till mid-2018. We'll ask how much more austerity is in store for Europe's most depressed economy. We saw an interesting phenomenon this past week: retailers voluntarily not selling one of their most popular products, and doing so in the name of people's health. It was World No Tobacco Day, and yes, the move to not sell cigarettes for a day was largely symbolic, but it served as a good reminder of just how large and influential the global tobacco industry is. And as you'll see in this week's program, we're not just talking about those who smoke, but those who unwittingly invest in the industry. It is an industry with annual revenues of nearly $500 billion. In fact, the number of cigarettes manufactured and sold has risen to 6 trillion a year worldwide, nearly double what it was 4 decades ago. The world's 6 largest tobacco companies control over 80% of the industry's market share. That big 6: China National Tobacco, Japan Tobacco, British American, Imperial Tobacco Group, Philip Morris, and Altria, which is the US arm of Philip Morris. China National, for the record, is the world's largest cigarette maker by profits and volume, and most of its money goes directly to its owner, the Chinese government. Interestingly, 1/3 of all cigarettes are smoked in China. And then there's the electronic cigarette market to think about. It's grown from just $50 million in 2005 to an estimated $7.5 billion last year, according to Euromonitor. The FDA said this month it was preparing to regulate the industry for the first time. So the short story is that some big companies and governments are making a lot of money from something which is largely accepted as being bad for people. But even if you're not buying cigarettes, you may still be buying into them. In May of this year, one of the world's biggest insurers, AXA, said it can't continue being a health insurer and supporting tobacco. It committed to stubbing out its investments in tobacco stocks and bonds, and even called the tobacco industry a sunset industry, in other words, on the way out. Now that's debatable, because tobacco stocks outperformed the market in 2015 and have in fact done so for the past decade. But we're talking about ethics here, investing in something which has little positive upside. And now there are also calls on the pension funds to follow AXA's lead. Think about it. You work, you contribute to a pension fund, it all happens behind the scenes, and you don't necessarily think about how that pension pot is being filled. Are you all right with it being metaphorically topped up with cigarette butts? Let's discuss that with Jonathan Hoare this week. He is Director of Policy with the London-based charity Share Action. Jonathan, we have come to this issue through the story of the UK scientists who work for cancer research and have found out that their pensions are invested in tobacco companies. Now, for them, obviously, this is an ethical issue. It appears wrong. But I guess this type of thing must be happening all over the place for a long time.
What we're talking about here is the scientists in universities whose pensions are invested through something called the University Superannuation Scheme, or the USS. Now, USS, like many pension funds, the trustees of that scheme have a difficult job to do to balance off the need to pay the pensions and to make enough money from the investments to pay the pensions, and to assess the risks of those investments not working. So they will invest in a range of different things, in things like property, into equities and into bonds, and they'll invest into a range of different companies. And that means they will be investing in things like tobacco companies or other investments that some people might think are controversial. Now, in this case, tobacco stocks tend to perform quite well in the UK in particular. And so it seems like the pension trustees have made the assessment that actually it's the right thing to do for their overall balancing of risk to be invested into those stocks.
So who is it
now,
incumbent
that still means
on?
that it's,
Sorry, I'm going to interrupt you there, Jonathan.
Yeah.
Who is it incumbent on? Is it up to the pension schemes to A, be thinking more about who they invest in, and then B, being transparent about that, disclosing it? Or should we, the workers who are contributing into those pension funds, should we be saying, well, we want to know and we want to be ethical about where we're investing?
At Share Action, we certainly agree that pension savers should be listened to more. And that's the key thing, is that it's not necessarily everyone putting their hand up and having a vote on where investment money should go, but it's about the pension savers, who, as you say, it's their money at the end of the day. They should have their views listened to, and they should have good answers to why the scheme is investing in a particular way and taking a particular line. They should also get good answers on how the scheme sets its engagement and its voting policies. Now, shareholders have rights in companies to vote on motions at annual general meetings and to meet with the company executives to understand what that company is doing, and in some cases try and change the way the company is behaving. That could be asking them to pay higher wages to their most low-paid staff, or asking the company to source its electricity from renewable energy, or asking it to disclose more information about climate change risk. And pension savers should have the information about what the scheme is doing on engagement and voting as well. And with the scheme in question, USS, to be fair to them, they do listen to their members. They've thousands of their members, some with Share Action's help, have engaged with USS over the last 10 years and have got good answers to some of those questions as to why they're taking a particular approach and why they're doing particular things. So, but just to come back to that point, we do think that pension schemes should do more to listen to their members and should do more to explain to members where the money's going and how it's being stewarded on their behalf.
Jonathan, any investment scheme, in this case we are talking about pensions, but any investment scheme is about making money, right? Let's just put that out there and be very simplistic there. And as you've pointed out, tobacco stocks have traditionally done well in the UK. They bring in a lot of money. So if a person wants to have that solid pension retirement fund when they end up their working life, they need the big returns. It's going to be difficult, is it not, to ask the pension funds not to go after the place where the big returns are?
It depends on the mix of investments that the pension fund is investing in, and the trade-offs and the choices they make. So with individual funds where the saver can choose the kind of fund, they may choose a fund that does exclude tobacco, and maybe it's got more investments in other things to try and sort of balance off the risk of not having those kinds of returns. As you say, to pay off the pension. But there's also something to think about in terms of the risks of being invested in a particular stock. Now, there's lots of regulatory pressure on tobacco companies, as we know. There's recently been a court case in the UK which has upheld the law that says that cigarettes have to be packaged in plain packaging. Now, investors may take the view that actually, over the long term, these investments aren't going to continue to perform as well as they have, as more and more regulatory pressure comes on tobacco companies. And those are all things that the trustees need to balance off and to think about when they're looking after these investments for other people. The other thing is that with some of these, with lots of the factors that are traditionally considered ethical, they're often financially material. So climate change may seem like it's an environmental issue and it's something that people should care about because it's the right thing to care about. But actually, if you look at some of the things that the Governor of the Bank of England's been saying and that other big financial institutions have been saying, there is significant financial risk being presented by climate change. And financial institutions and investors need to be thinking about those risks and need to be deciding now what they're doing about their investment portfolios to prepare themselves for that and prepare themselves for a transition to a low-carbon world.
Jonathan Hoare talking ethical investing with us this week on Counting the Cost. Jonathan, thank you for your time.
Thank you.
Now, while we're talking tobacco, we've got an interesting case study to bring you from Indonesia. This is one place in the world where the cigarette industry is expanding. In fact, the government there has decided to double production, taking it to more than 500 billion cigarettes a year by the year 2020. More on that from Step Varson.
Women persuading fishermen to buy cigarettes. Anti-tobacco groups say cigarette marketing has become increasingly aggressive in Indonesia. Most public events are sponsored by tobacco companies and advertisements are all over the place, including on TV.
You can see from the advertisements that they are using the best marketing strategies to dominate the market in Indonesia because in their own country they cannot do this anymore. So Indonesia has become the target.
International tobacco companies control around 45% of the Indonesian market. In 2015, Philip Morris announced a $1.9 billion expansion of its tobacco factories in the country. Kami dari televisi Al Jazeera. The company has declined several requests for an interview. Also, requests for access to the newly built factory in West Java have so far been rejected. From the headquarters in Switzerland, Philip Morris had promised us an interview, but it was suddenly cancelled. So questions about their expansion here in Jakarta and the impact on Indonesia's youth remain unanswered. Okay. With 65 million smokers, Indonesia is a big market. 1 in 5 children start to smoke before the age of 10, and nearly 40% of boys aged between 13 and 15 smoke. In this document, the government says, due to increasing consumption, a previous plan to limit cigarette production is no longer valid. President Widodo aims to double yearly production to 524 billion cigarettes by 2020. Generating revenues of $12 billion a year. There's no mention of health concerns associated with smoking.
If we talk about health and death, why does the United States not close its arms industry? How many people die because of shootings? Why doesn't the world care about the weapons industry if they care about people dying?
To protest against the expanding cigarette industry, people are on the streets.
As students, we have a moral obligation. We protest today because we want to protect future generations.
An estimated 217,000 people die every year due to smoking-related diseases. The Ministry of Health says healthcare costs are 3 times more than revenues from cigarette tax.
Foreign companies benefit most. Where do all these profits go? Not here. We are left with diseases that will become a burden for our government. It is evil and it is covered up and supported by government and parliament.
They're killing people.
Indonesia is the only country in Asia that has not ratified the Framework Convention on Tobacco Control. The government has no plans to increase the price of cigarettes, which at a little over $1 a packet are among the cheapest in the world.
And still ahead on Counting the Cost, Taiwan, famous for its technology industry, but it may need to adapt if it wants to remain so. We'll bring you that story a little later on. Right now, though, we look at Greece, the story, the economic collapse which never goes away. Last month, the Greek government got access to another batch of much-needed bailout funds, this time worth 10 billion euros. But if that sounds familiar, well, it is. Greece gets the emergency money, but also more of the economic pain that comes with it. Gerald Tan looks at that.
For years, the Greek economy has been on life support. Now it's getting some breathing room because the bloc of 19 Eurozone nations has agreed a new batch of bailout loans, $11.5 billion.
I think it's an important moment in the long Greek program, an important moment for all of us. Since last summer, where we had a major crisis of confidence between us, that confidence has begun to recover.
The deal reached in Brussels is expected to have a major impact in Athens. Greece's debt is set to reach $380 billion this year. That's nearly double its economic output. Government leaders are trying to get some of that international debt forgiven. They also need funds to pay creditors and government employees. and they're trying to show the world Greece is still a good place to do business.
I think there is some ground for optimism that this can be the beginning of turning Greece's vicious circle of recession into one where investors have a clear runway to invest in Greece.
Greeks have suffered painful reforms to reach this stage. Parliament passed new budget cuts on Sunday, along with more tax rises and a privatisation fund to manage state property. Conditions demanded by creditors, but largely opposed by Greeks, who are asking how much more can they endure.
And this is just it, more money, but with conditions that look unattainable. Philip Ammerman's joining us via Skype from Cyprus to talk about this. He's an economist, author of the book Are Greece's Creditors Really Loan Sharks? And he also is the co-founder of the European Consulting Network. Philip, first off, is there anything to suggest that Greece will be able to meet the requirements for this latest bailout tranche?
Greece has been meeting the requirements, but, maybe 10%, 15%, 20% of the requirements as they are implemented on the ground, implemented in the real economy. There hasn't been a very major change or liberalization or structural adjustment as far as anyone can see.
OK, so then we have to go a bit deeper here, I think, and actually back to the whole concept of austerity. Isn't all of this, well, first of all, won't the next bailout just do the same and bring more austerity to Greece? And second, isn't it just proof that austerity doesn't work? Certainly not in Greece's case.
Yes, I mean, the latest bailout does include quite a bit of austerity. It includes higher taxes and reduced government spending, notably on pensions. But we have to remember a couple of things. The first is that the root causes of the Greek public sector debt have really not been addressed. And those root causes are a bloated public sector with very, very inefficient processes. So the structural adjustment component of this plan has not really been implemented, or if it has, it's only really been implemented on paper. So we cannot talk today about higher public sector productivity, for instance. We cannot really talk about, more services to citizens or more effective services to citizens. It's all very large the same system of governance, irrespective of which political party is in charge. The second thing, though, that we need to remember is that, in no economy does the public sector constitute the only source of economic growth. So yes, we may have austerity in the public sector, but in a normal economy that would be offset by a private sector which is growing and by private sector investment. That too has not happened in Greece. We've had a dramatic depression based on errors in the public sector, based on a financial crisis, two financial crises, in fact. So what's needed is growth. The public sector austerity would be manageable if there were private sector growth, and that growth is precisely what is not occurring.
Philip Ammerman on Greece's latest hurdles there. Thank you, Philip.
Thank you.
Now, oil was in focus again this week as energy ministers from OPEC countries headed to Vienna for their first official meeting of 2016. But as expected, the world's biggest oil-producing nations kept their production policy unchanged. OPEC's so-called Fragile Five, that is Venezuela, Iraq, Algeria, Nigeria and Libya, had hoped for at least some sort of cap on production to help push prices higher. It seems oil at near $50 a barrel isn't high enough to fix their public finances, nor is it low enough to prompt some kind of agreement on production policy. So for now, the cartel seems to be content letting the market dictate the price of crude. And from legitimate oil players to illegal ones, a report from IHS Global has shown just how crucial oil is as income for ISIL, the Islamic State of Iraq and the Levant. The group's believed to be making between $20 and $40 million a month from oil production in Syria and Iraq, most of that sold on the black market. On top of that, ISIL strictly enforces taxes on all businesses in areas it controls, as well as confiscating land and properties. Plus, there are old-fashioned robberies, really, from banks in cities like Mosul and ransom funds from hostages they've kidnapped. All of this puts the group's estimated net worth close to $2 billion. Well, here's the thoughts now of Asad Alachi, who is the director of Baitna Syria, a Syrian civil society movement. He told Jane Dutton from the annual Doha Forum here in Qatar that he's not surprised ISIL has gathered so much money in such a short space of time.
Given that ISIL, and I can speak only of Syria because this is my specialty,
Sure.
Given that they've controlled all of the oil fields that Syria has, and given that today they're producing about 20,000 barrels of oil only out of Syria, and we're not talking about how much they're producing in Iraq, it's normal that they've amassed that much of a wealth. Now, what is not spoken about, though, is the amount of taxes they're charging on civilians. So although it's assumed that oil is their major source of revenue, actually, as of last month, according to estimates, taxes and extortion payments from civilians in the areas where ISIS has control have taken precedence over oil revenue. So
wow,
today,
that is extraordinary. So really high taxes
is number one.
And I should imagine that everybody pays.
Absolutely. You don't have a choice when you have a gun to your head. Or a sword in that case, or a knife.
Yeah. Tell us more about the oil industry. I mean, there was a lot of speculation that one of the reasons oil was pushed down to the prices that we're seeing today is to try and squeeze ISIL, but still they've got control over so many fields. How do they get the oil? How do they get the oil out?
Well, basically they've taken control of the fields that were already producing in Syria before they took control of. So. Oil fields that were under control of the Syrian Petroleum Company, i.e. the Syrian government. Now, funny enough, the Syrian government or the Syrian regime is still their main customer. So
really?
all the oil they're being able to extract, from the ground in Deir ez-Zor or in Hasaka in the north or Raqqa is being pumped into the refineries of the Syrian regime in Banias and in Homs, or trucked to the Syrian regime. We've all heard about George Haswani, the famous middleman. He's a Syrian Russian. He's a dual national of Syria and Russia. And he was the middleman who made all these agreements and deals possible between the Syrian government and ISIL. ISIL is selling the barrel of oil at a price between $8 and $12. So they're heavily undercutting the market. So from an economical perspective, it's actually quite cheap oil to go and get. I mean, I know the Syrian crude is not the best quality crude in the world. It's heavy, it's sour, etc., and it's full of impurities. But given that it's selling at about, let's say on average $10 a barrel, when the market today is at about $45 or $49 a barrel, it's a huge subsidy to the Syrian government, who's their main customer. So as long as ISIL is allowed or continue to sell at these very depressed prices, they will always find customers.
Finally this week, made in Taiwan, a phrase synonymous with, well, a lot of products, but particularly technology. 90% of the world's computers are from Taiwan, a third of mobile phones. But there are some downward trends too, which have the new president just a little concerned. From Taipei, Adrian Brown tells us why.
The newly elected president of Taiwan is now one of the world's most protected leaders. Tsai Ing-wen was guest of honor at the annual Computex exhibition in Taipei. Her message, Taiwan needs to adapt if it's to remain a high-tech hub.
I believe everybody realizes that the new wave of technological transformation has begun. This means our old ways of manufacturing face a big challenge.
Outwardly, the mood at Asia's largest computer show is upbeat. But there are growing signs the tech sector is struggling to maintain its competitive edge. Industry representative Li Chung believes the only way to halt the slide is to allow more foreign investment, including from China.
I don't think our investment in the regulation is good enough or free enough to attract the capital overseas. And our government always says that invest, I welcome, but if you are the investor from China, we don't welcome.
Taiwan transformed itself from a labor-intensive economy to a high-tech powerhouse during the 1980s. But making devices at low cost for big names such as Apple and Samsung is not as profitable as it was. 5 years ago, Taiwan's high-tech industry was riding high. The mobile phones and computers it manufactured dominated in markets like Europe and the United States. But the fortunes of some of those manufacturers rose as quickly as they fell. Last year, the share price of the computer maker Acer dropped by more than 40%. Competition's growing because consumers increasingly want devices made overseas. Ultimately, mainland China remains Taiwan's most important export destination. But that may need to change as well.
You cannot put all your business opportunity in China. You should do your business to all over the world, not only focus in China.
And that's the dilemma for Taiwan. Chinese imports are hurting a key industry, while more Chinese investment might help secure its future.
And that is our show for this week, but there's more for you online at aljazeera.com/CTC. That'll take you straight to our page with individual reports, links and entire episodes to catch up on. You can also get in touch with us. You can tweet me at KamalAJE. Do use the hashtag AJCTC when you do, or just drop us an email. countingthecost@aljazeera.net is the address. That is it for this edition of Counting the Cost. I'm Kamal Santamaria from the whole team. Thanks for joining us. The news on Al Jazeera is next.